Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me is Mark Marex, Product Development Specialist with Nasdaq Index Research, to discuss the performance of the Nasdaq Junior Biotech Index and how it compares to the more commonly known Nasdaq Biotech Index, or the NBI. Mark, it's great to have you with us. Welcome back to Trade Talks.
Great to be here. Thanks for having me, Jill.
All right, Mark, let's learn more about the Junior Index and what its top 15 holdings are compared to the NBI, as well as the market cap segmentation.
Sure. Just to give people a bit of background on this, NBI is the Nasdaq Biotech Index. It's been around for about 27 years now, and a few months ago, Nasdaq launched this junior version of NBI, which is really just taking all the companies that are sub 5 billion in market cap that are within NBI and packaging them into a new index. All other rules are the same. And we had actually just yesterday the first product launch that was tracking this index from Defiance. The Nasdaq Junior Biotech ETF was launched yesterday. So with that, we can get into top 15 index weights, and then talk about performance and market cap segmentation and other things like R&D. So, just to start off, you've got on the left top weighted constituents of the Nasdaq Biotech Index. On the right, the top 15 in the Junior Index. You can obviously see a big difference right away. Right, there's no overlap here. The top 15 in NBI, they are all well over the $5 billion threshold. These are both modified market cap weighted indexes with a max weight of 8% and a second capping at 4%. After the top 5, you can see that for the junior version, they really don't come close, right? Once you get within that sub $5 billion market cap space, you've got a much more even distribution of the weights. You don't have outliers at the top end of the spectrum. So here we've got, really only 3 names that are above 2% weighting.
All right. So, Mark, when we look at these larger companies versus the smaller in the Junior Index, which one would you say is more R&D intensive?
So there's a few ways to look at this, right? You could do it on a weighted average basis by index constituent, or you can just look at the total, right? Total sales, total revenues of all the companies in the index versus the total R&D expense. So we looked at that for full year 2019. For the Nasdaq Biotech Index, it was just over $200 billion of revenues versus $57 billion of R&D. So, a little bit under 30% of revenues are R&D in Nasdaq Biotech. That is a huge percentage. Just for point of reference, the Nasdaq 100 weighted average is around 10%. For the S&P 500 as a whole, it's around 5%. For a company like Boeing, certainly no slouch in R&D. They average something like 3 to 4% of revenues in R&D expense. So close to 30% for the Nasdaq Biotech Index. For the junior version, on the right, you can see it's just over $30 billion of revenue last year, almost $20 billion in R&D expense, so 2/3. So more than twice as intensive R&D as a percent of sales for the junior version of this index.
And Mark, how does the performance match up between the two?
So, it's kind of tricky to talk about historical performance here with the junior index, given that it was just launched at the end of April. It is up about 5.9% from launch through end of July versus 6.9% for the regular biotech index. So tracking pretty closely. This is a year-to-date view, which you can see also was tracking pretty closely up until I would say the last week or two of July. There were some market headlines that hit from the White House about potential change in policy around drug pricing, trying to get those drug prices down, at least in the US. So that is my sort of main reason, I think, for why there's been recent underperformance in the index. We'll see how those political driven headlines shape out for the rest of the year. But I mean, certainly before that, you can see that both the biotech and the junior biotech were leading the S&P, were leading IXV, which is the S&P Healthcare Sector Index, and almost pretty much keeping pace with Comp, which is the Nasdaq Composite.
All right, Mark, thanks for joining us as always.
Thanks for having me.
And thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.